Hi guys, welcome to our channel Share Experience. Today we are going to see what is ledger and proforma of ledger and how to prepare ledger accounts. A ledger is defined as a summary statement of all the transactions relating to person, asset, expense or income which have taken place during a given period of time. Features of ledger. Ledger contains all the accounts, personal, real and nominal. It acts as a means for easy reference. It provides final balance of the accounts. Now we will see the ledger proforma. Each account in the ledger is divided into two equal parts by a vertical line. The left hand side of the account is known as debit side and the right hand side is known as credit side. Each of the two sides further divided into four columns, that is date, particulars, folio and amount. F stands for folio. Folio means page number of the journal or a subsidiary book. Now we will see how to prepare ledger based on journal entries. Here I have considered two transactions. Those are goods sold for cash and goods purchased for cash. Journal entry for the first transaction is cash account debtor to sales account. The journal entry for the second transaction is purchase account debtor to cash account. Before preparing the ledger, we have to identify the number of accounts that are there in the journal entries and prepare separate ledger for each account. As per the rule, whichever account is debited in the journal entry, that should be credited in the ledger, and whichever account is credited in the journal entry, that should be debited in the ledger. In this case, we have three accounts to consider. Since cash is repeated in two journal entries, we should consider it only once. If you are taking more transactions and any account is repeating more than once, you need to consider that account only once. Now we will see how to prepare a ledger for cash account. Here in the first column we will mention the transaction date, that is March 1st, and in the second column is the particulars column. In this column we will mention two sales account. Since we are preparing the ledger for cash account, we should check where the cash is appearing in the journal entries. Here in both the journals, cash is appearing. In the first journal, cash is associated with sales. So we need to consider sales. The rule here is any account that is debited in the journal, it should be credited in the ledger. Sales is credited in the journal, so we are debiting in the ledger. While mentioning any account on the debit side of the ledger, we should use 2 before the account name. Now we will mention the debit amount, that is 2600. Cash is also appearing in the second journal and purchase is associated with cash. So the rule is whichever account is debited in the journal entry, that account should be credited in the ledger. So in the date column, we will mention the transaction date as March 2nd. In the particulars column, we will mention by purchase account. While mentioning any account on the credit side of the ledger, we will use by before the account name, and we will mention the credit amount as 200. As per the balancing rule, we have to consider the highest amount to balance on both the sides. So I am taking 2600 on both the sides. Now whichever side has less amount, that side we have to mention balance carry down. Here we are mentioning on the credit side, so we are using by balance carry down. We subtract the lesser amount from the higher amount and the difference amount is mentioned against by balance carry down, that is 2400. Since we are balancing out on the month end, we mentioned month end date against balance carry down. Here I am mentioning as March 31st. The same amount, that is 2400, will be brought down to the beginning of the next month, that is April 1st. Here we are mentioning balance brought down in the particulars column and 2400 in the amount column. Since I have mentioned balance brought down on the debit side, I have used to balance brought down. If we are mentioning on the credit side, we have to use by balance brought down. Similarly, we need to prepare ledger for sales account. The transaction date here is March 1st. First, we need to check where the sales account is appearing in the journal entries. In this case, sales account is appearing in the first journal and it is associated with cash account. As per the rule, cash should be credited in the ledger. So we will mention by cash in the particulars column on the credit side of the ledger. And we will mention the credit amount, that is 2600. As per the balancing rule, the highest amount is considered to balance on both the sides. Here we have only one account with amount 2600, so we mention 2600 on both the sides. Since we only have one account on one side of the ledger, we will consider the other side to mention balance carry down. So I am mentioning to balance carry down, and that is 2600, and the date is month end date. We will bring the same amount to the beginning of the next month, that is 2600, and mention it as by balance brought down, and the date here is April 1st. Like sales and cash, we will prepare ledger for purchase account. First, we will see where the purchase account is appearing in the journal entries. Here in the second journal, it is appearing and it is associated with cash account. Here, cash is credited in the journal entry. As per the rule, cash will be debited in the ledger. The transaction date is March 2nd. In the particulars column, we mention to cash account and the debit amount is 200. As per the balancing rule, the highest amount is considered to balance on both the sides. Here we have only one account with amount 200, so we mention 200 on both the sides. Since we only have one account on one side of the ledger, we consider the other side to mention balance carry down. So I am mentioning by balance carry down, and that is 200, and the date is month end date. We will bring the same amount to the beginning of the next month, that is 200, and mention it as to balance brought down, and the date is April 1st. Now I want to give you a summary of what I just explained. There are points need to be remembered. The first point is identification of accounts in the journal entries. For every account, a separate ledger should be maintained. If the account is repeating more than once, considering all the journal entries for the particular period, we have to consider that account only once. If the account is debited in the journal entry, that should be credited in the ledger. And if account is credited in the journal entry, that should be debited in the ledger. When we are posting on the debit side of the ledger, we should use to before the account name. When we are posting on the credit side, we should use by before the account name. As per the balancing rule, we have to consider the highest amount on both the sides to balance out. Whichever side has lesser amount, we will mention it as balance carry down. And if this is mentioned on the debit side, then it is to balance carry down. If this is mentioned on the credit side, then it is by balance carry down. We should use the month and date again as the balance carry down. Lesser amount should be subtracted from the higher amount, and the difference amount is mentioned again as balance carry down. The balance carried on amount will be brought down to the beginning of the next month and it is mentioned as balance brought down. If the balance brought down is on the debit side, it is to balance brought down. If it is on the credit side, it is by balance brought down. If you have any questions, please post it in the comment section below. If you like my explanation, please do subscribe my channel and hit the bell icon. Thanks a lot for watching this video.